Let me pull up this thing here before I get techie with it. Alright, fuck it. We'll just start. Top and bottom of the range. We move on to the lower time frame and understand that we're currently pulling back after this closure against the last hour candle here. We see another pullback created to the downside and still fail to close above it. Meaning this low is not valid at all because we have not had a closure above a previous high yet. So what's currently happening is we are ranging in between this low because it's responsible for putting in a high. So that's just what we see on a 4 hour. We're at the top of the range. That's where we are. So us being at the top of the range, there's always a probability for this low to get taken. Before reaching higher prices. If that don't happen, because this low is valid on the lower time frame since it put in a new high, right? So if we don't end up taking this low and just tap into the last down move here, we could have a potential shift there. But the whole reason of me marking out the previous day high and low, or just in general the previous candle high and low, is to understand where you are within the range, within a higher time frame range, when you're on the lower time frames. And when I'm on the 15-minute, I apply the same concept. Where's the previous candle? Where is the previous candle? Then we got that down candle there. Did we get a closure above that? We did. So we got this and this. That's the previous up candle, because we saw that there. And you move down to the lower time frames. And in order for you to gain perspective of what's going on, you apply structure. You apply the rules of structure. So we got that last down move there. See a closure above it. We're pulling back until we get to that tippy top high right there, and now we made this a valid low, so we know we're trending up on a higher time frame. What do we see? We move back into that previous range, continuation out. We failed to close below this low, so this high, whatever is up here, is weak. Because we know we're at the top of the range and we have our sights set at the liquidation of this high, we know that if we want to sell, our chances of success of monitoring, engaging, in a sell at the top of the range is much higher if you were to wait for this. And yeah, because when you're trading the 1 minute, I always wait, and I tell the people that I help to always wait for something to be taken first. And I'm talking always wait for a valid high or low to be taken first. That way you can manage a 1-to-1 fairly successfully. 7, 8, 9 times out of 10 if you sample out 100. In each sample of 10, you will see that you will win 7 or 8 or 9 times out of 10. If you just choose to be patient with the structure thing, man. That's all it is, bro. It's all about having boundaries, or at least that's what I've learned. Boundaries in which you're willing to position yourself in the market. Let me step to the... I'm either waiting for that or for that. I'll go through the same routine on US 30, or maybe even just gold, because DAS and US 30 kind of correlate. Let me just go on the daily. I've got something here, I don't even know what it is. Let's check it out first, because I remember I did this on stream. I was looking for a rejection in here. It didn't happen, so we ended up getting that. Moving back into, okay. So I'm looking for this high to get cooked, or this low to get cooked, but that's without us doing a high time frame analysis. Let's just start from there. We got this, previous candle high and low, move down to the lower time frames, get a concept of what structure is telling us. So that's that and that. We're currently pulling back. How do we know? From this last down candle here. Fail to put in something as well, that as well, that as well. Get clipped. So we're currently pulling back into, see, that's the importance of doing the whole fucking top-down analysis. So us waiting for this high now gives us a bigger picture, and that's for why we can. That's the why, but the confidence is in what happens to the right. So that's why you should really start out on a daily time frame. I forgot what this is, but I'm gonna start seeing. I forgot what that is. I'm gonna start looking at because we know we're inside of a range. Just from the knowledge we know, that first counter trend reversal is usually made to be liquidated, so we can experience deep drawdown between this range here. So it's like, if you're looking for longs anyway, I'd just like to remind you of that. But that's on the higher time frame. We look at the 15-minute now, right? The range. I think I rushed that. You see, I did indeed. I did indeed. to the top and bottom of the 15-minute range. Check out structure. We see the initiation. We see one pullback. Second one has yet to be liquidated, so we know that we're in a strong trend to the downside. Doesn't mean we can't see rejections on the way up, but I'm talking about managing expectations in a way where you're not longing at the top of the range, because you already observed these type of behaviors before, and you remember that you lose in trends, especially in downtrends if you're longing. Vice versa if you're shorting. You need to know when to step in and when to step out, understanding when we're trending versus when we're ranging. And I keep talking about the liquidation of the previous candle. That's why we track the previous candle in the first place, to let us know when market conditions have shifted. So we're currently downtrending. Not yet. I jumped to conclusions. I thought that was a closure, but it's not. So the fact is, right now we're failing to close below a valid low on a lower time frame. Valid. Okay. So I'm waiting for lower prices. I'm waiting for a sweep of these lows, but more importantly, I'm waiting for the liquidation of 3 pullbacks. And depending on what I see here, well, depending on what I see there will determine if I'm in a trade or not. That's gold though. Let me see, how many do I see on the 1 minute? See that liquidation of 1, 2, 3. Where am I? I'd much rather wait. But this is the first. Oh, this is where we're coming from. Yeah, of course. So of course I would wait for this. Yeah. Yeah. Makes sense. And that ties up to the title of the stream, really. Knowing where you're coming from. Keeping a bigger picture outlook on things, knowing where you are from a higher time frame. You should be able to zoom out and be like, oh yeah, cool. I'm positioning myself below this number, whatever that number is, because just conditions have been met. As for what those conditions is now, you don't have to worry about that too much, because you will arrive where I am currently by tracking the liquidation of pullbacks. That's how you time your entry. That's how I time my entry. That's what I use. More importantly, that's what I use every day to get to where I am right now. So if you're interested though, just shout me, you know. You got my socials, or you got one-on-one. And there's some one-on-one sessions in the description. So once you start backtesting, you start to understand that these valid, what we call valid highs and lows, right? Responsible for putting in a new high. They're vulnerable too. Yes, they're responsible for something. Yes, we can say that the market's trending high. Yes, we can understand that this is just a higher time frame pullback. But because we've backtested, we understand that if we want to manage a substantial rejection, we know that behavior doesn't happen inside of a range. It happens outside of a range. It happens inside of a range too, I'll be real. But the probabilities of it happening are lower than if you had just waited for it to occur outside of a range. So asking yourself where we're coming from will allow you to know the context of what's happening. And I'd like to put this down to technical terms. I don't want to just leave it like where we're coming from, philosophical or some shit. Where we're coming from is literally from the previous high to the valid low to the break of it. That's the context, because that creates a previous range for us to move back into, and now you know where you are. You're inside of a range. Do we trade the middle of a range? No, we don't. We either trade the bottom or the top of it. If we're at the top, we're only selling. If we're at the bottom, we're only buying. I do believe that's simple. And now all that requires of you is your ability to wait. Nothing psychological, bro. Actually, it's no secret that the market moves like this. I'll say that. It's no secret that we buy low and we sell high. It's no secret. But what stops most of us is our inability to wait for the market to get to these levels. We think that just because we open up a chart right now and we want to realize our intention to withdraw profit, that the market is ready to do that for us. It's a different state of mind when you start to realize that just because you're ready don't mean the market is ready. And what's more important is that the market has to show you is ready in order for you to engage. It's not the other way around where, okay, cool, I'm ready to engage in something. Now you're just looking for confirmation in the market. Like, why are you that's also something I'd like to address. A lot of focus on confirmation, or a lot of focus on setups, or a lot of focus on models, right? I'd like to tell you that though models, setups, confirmations are part of the package, I'd like to just bring you back down to earth a bit and understand where you are applying your models, your confirmations, your setups. For example, my confirmation is at every single high and low the market makes. But am I engaging in every single high and low? No. Because when we bring ourselves, what we're all trying to achieve here is a secure financial future when we're trading, right? We're trying to earn a return from our investments so that we can buy more of our time back and just live life. In order to do that, you must build it on a sustainable foundation. And you'll understand very quickly that just because you can be right about the direction of the market doesn't necessarily mean that you need to be involved in that position. If you have your sights on building a sustainable income just for the rest of your life until you sign out of this planet Earth, bro. So it's about understanding you don't need to be engaging in everything. You just need to engage in that one thing you know. If you have to treat trading like anything, It's a hunt, bro. It's a literal hunt. You're out here stalking the market, if anything. You're not even reading it too tough. You're just more time stalking that area that you know you can engage in a higher time frame pullback in to where the previous range that we created, to move back inside and probably just liquidate. Why? Because we know it's just a higher time frame pullback. But yeah. Oh yeah, let me go on JPY. Let's see what that's doing. I had some markings from yesterday. I don't know what that's about, but let's just do a daily right now. We're currently pulling back. Oh, we had a failure to close it. Okay. So this low is not valid until we see a closure against this pullback down this range. This low is currently weak, so we know that this idea can still happen. Or we could get a closure and then we see a new valid low, a new range for us to move back inside. You know, everything that's coming out of my mouth it's just down to you're preparing for market conditions to shift, and when it does shift, you're able to execute your plan swiftly, and now you just watch it, moving on to the next thing in your day. You can't move forward unless you see something happen. You know, you can't move forward unless you see the market do something. Yeah, steady counting. So we know a reversal is about to ensue. This uptrend that we have here is exhausted. You can start to see it's making larger drawdown moves. We'll see what I'll go on though. I don't know what the fuck these are. That was a target, but whatever. We don't need that there. All we really need is just us showing ourselves that, yeah, we are tracking. We are tracking our pullbacks. So where are we? Top of the range, bottom of the range. That's where we are. Where are we coming from? If you want to answer that question, it requires you to know where your pullbacks are, where your valid highs or lows are, in order to answer that question. If you can see your valid pullback, your valid high or low, and a valid high or low is just responsible for closing out of a pullback, right there, that's your context. That's what you start from when it comes to getting intel from the market, getting intel from what the charts are telling you. You start there. So let's go on the 15-minute, and then now we're gonna just know where we are on a scalping environment, which is just the 15-minute previous candle. Hold on. I'm looking at this down candle there. And then in a scalping environment, I'm looking at the 5-minute for context. High time frame pullback, we see right there, into where this valid high, responsible for putting in. It's all there, bro. It's all there. So now that we know we're moving out of a range, we're shifting into trending environments. So let me make this clearer. What was this? Oh yeah, the 15-minute range. So now that we're going at the bottom of the 15-minute range, this is the top of the 15-minute range. If we wanna buy, what are we waiting for? Well, first of all, before we even know that, we're counting that first. You see the reversal. We started a new one, so that's 1, 2, third pullback reverses for the new one there. So we haven't seen any pullbacks ensue yet between that high and this low. I mean, this low and this high. Let's go into 1 minute. Let me erase these drawings though. Cool. What do we see? We see 1, 2. We only see the liquidation of 2 pullbacks. I want to see 3 before even trying to grab something, you know. Where are we though? Oh, okay, I'd at least wait for this to get clipped. Where are we coming from? I had this over here for some reason. Do you guys see the consistency in that move? We literally close against the pullback and we see the move back in to the previous range that it creates. It's just there. It's not a secret, bro. It's not a secret. You see it on your charts too, bro. So in scalping environments, this is how I anchor my perspective. How do I anchor my perspective? 1, 2, 3, reversal usually gets liquidated. It's just it's tracking your pullbacks really and truly, bro. It's the same thing. I'm gonna keep saying the same things every single stream because it's what I do every day. It's what I do every day. It's what feeds me every day. I believe these habits are the habits, bro, to maintain consistency. Because nothing is subjective. You literally can't move on with your plan unless you see a closure happen in the market. You don't move forward until a closure happens. It's not based on how you feel in the moment. It's not based on anything that's going on in your mind, bro. Backtesting this, you'll understand that the only psychological issue you have is really and truly with yourself, in terms of mastering yourself. But you clicking the button on the screen that, you know, can make you money, bro, you got that already, bro. You've got that skill already. Now it's just about clicking and seeing green every day. But in order for you to see green every day, it requires you to just tap into yourself in it. The technical skill is the easiest shit that you can learn. Anyone can learn something technically. Anyone can go and learn something. Learning is not hard if you just learn the right way. If you learn the way whoever's teaching you is telling you how it's meant to be learned. But then the only thing that can get in the way is yourself in the process of just you working the system. Just working the market system. The system works, but it's just you that deviates from the system, right? And Start with patience. What I've done is just I've put patience down to a whole technical language. I've been able to correlate I've been able to measure patience on the market, because I know we've all heard it, bro, but patience pays. Patience pays. That's true. That is the one true statement that I accept. Patience pays. It's the only thing that pays you in this market, bro. And that's real. That's real. I'm looking at NASDAQ though. What's that doing? Dumping. I'm going 5 minute though. See that? No closure yet. Did I not? It must have been another pair. I should do these in different colors. It can get confusing. What the fuck is this? Okay, cool. So we got a continuation out. In the event that we get that, oh, that looks sexy, because we all know that the first trend reversal is what? The first trend reversal coming from this, by the way. See the initiation, you see 1, 2, 3. So where do you start? I'll clarify this. Where do you start counting your pullbacks? From the valid low or high that put in a new one. But you're counting your pullbacks even before you see that validation of that low, because now you see, okay, cool, it's just a pullback. We see a closure against the previous candle, as you should always keep a habit of doing. So understanding how many pullbacks are liquidated lets you know, okay, cool, when the trend is not exhausted, basically. When the trend is still fresh, healthy, that it will still keep going, or when it's exhausted and when it's likely to reverse. And that's how you time yourself in these markets. Because it's not really a mechanical approach. The market doesn't always reverse at 3. It can reverse at 4, 5, 6, 7. Fuck it. It can reverse at 2. But your discipline is in the fact that you want to wait for the liquidation of 3 before moving forward with any kind of plan of risking your capital in the market. Usually the market will show you something, but we got that. Let's see if we get that closure. Failure to close his failure to close at the 5 minute. You want to start paying attention to that. Let me go on 1 minute. Okay, cool. You go on lower time frames and you're just like, let me just see that. Let me just see that. You go on lower time frames and you want to pace yourself. Let me just see this third one liquidated real quick, and then maybe I can now target, you know, the previous candles on the 1 minute or on the 5 minute. That's how you pace yourself. That's how you do it. And following the narrative of the current trend, right? Keeping track of that current trend lets you know, okay, cool, is this an environment in which I want to engage with? You hold yourself to a certain standard now. Like, yeah, I'm not finna engage in under this shit. Cause I know it's just low probability. I can't put my money on this. My hard-earned money on that. Nah, fuck that. I've lost money in these environments. In exactly this. What environment? Any environment that we don't see the liquidation of three swings in. I've lost money there. That's why I'll keep repeating it. It's that. See the liquidation of three pullbacks, bro. Wait for that. Don't get used to this. Don't get used to counting this one here if you study DTFX. Right? Don't get used to counting that. Just get used to seeing the liquidation of the previous candle, acknowledging that it's a pull, acknowledging that it's initiated a pullback, and then start counting your pullbacks. Because how could you call this pulling back into what? How could you call this a pullback? So I'll just delete that. I don't know what that is. What the fuck? What the fuck? I'm trying to press delete. Oh, I'm pressing print screen. Crazy. However, when I'm talking about, let me when I'm talking about my favorite setup, this is what I'll be talking about. You know, it happens on every single high or low. This is my favorite confirmation, my favorite setup, my favorite thing to see on a higher time frame, and on the 5 minute at that. On the 1 minute too, but that's usually just a scalp. I'm talking higher time frame pullbacks, then it's on the 5 minute. If we're talking just scalping environments, you want to engage in that higher time frame move, 5 minute. If you just want to scalp, 1 minute. Seeing a failure to close like that, favorite setup. Because now I know that, okay, we have this low was responsible for putting in a high, but it failed to put in another high here. So I know that we can get at least liquidation of that, and more often than not, you can target that previous candle there, or even there. But that'd be me moving forward too fast with what I have to say about, you know, building consistency in the market, because that's gonna put you in the endless loop. You're gonna be trying to find that here, over here. You know, it's everywhere in the market, bro. It's everywhere. So it's about knowing where to place that confirmation, knowing where to place that confirmation. And sometimes it can look like this too. You don't control it. What you see in the lower time frames is more important than actually seeing this confirmation. I'll be honest, but it's the same thing that you're seeing in the lower time frame that delivers the higher time frame confirmation. It's everywhere. Everywhere. Every high and low. So you need to be able, are you placing your money? If you're back testing what I'm telling you, you're placing your money at every single high and low. No, you are not. This is why I say it's more important for you to understand how markets move. You understand the movement of one market, you understand the movement of every single market. I started on NASDAQ, but I apply everything I learned from NASDAQ onto different assets. I mean, you guys see it here on different pairs because it's just structure. So what's more important than knowing your confirmation, knowing your setup? It's knowing about how markets move. How do markets move? How do markets move? And then I'm about to cut after explaining this. So you usually see a candle like this, right? Inside this candle, okay, wait, first of all, and let's say we opened up here, right? So number one is top. It's the top and bottom of a range. You look inside this candle, you usually see number two, a pullback. This is structure, by the way. Number two is structure. You usually see a pullback, the liquidation of a pullback, or it could be, you know, that like that, right? You can see the liquidation of a pullback. And understand the liquidation of pullbacks puts you at the top or bottom of the range. And then the liquidation of a pullback, you already know, just with the way the market moves, and I keep saying it over and over, that when we liquidate a pullback, we usually move back into the previous range that we've created. And I'll leave you guys with that. Yes, number three is just the whole counter trend reversal thing. But just that alone, I'll even mention it. Yeah, I'll put it in there. So number three is understanding you tracking the liquidation of three and managing your expectations in a manner that you're not chasing that first reversal. You're waiting for it to be liquidated. That's how you manage risk. The whole point of this channel is here. The whole mentality of this channel is number three. Because this pays you. You build consistency on that. And what's the word for building consistency? Well, actually, it's not the word for building consistency, because you can be compounding anything. But the word I want to say is that's a habit you compound on. You intentionally compound on this. These two can just set you up, true, but you need to include that in your plan as well. It's in my plan. And everyone that's included this in their plan has shown success when I've told them about this. When I've shown them how to test what I've told them in order to validate it for themselves. Now, I have a 5-step process, but I can't say everything on stream, bro. Can't say everything on stream, bro. Just start with foundation, start with the basics, and you'll be alright, bro. You'll be good, bro. But I'm out, though. Hope you guys learned something. And if you did, please apply it. Apply it. Don't learn and then just have it sit. It's not even in your head at that point. You just don't. Right? Don't do that. Just please apply it, bro. Please apply it, man. Yeah, man. I'm gone. Safe.